Hello folks, welcome back to another breakdown video, and let's get started. So here we have Nasdaq, right? So the first thing first, I would like to see what's price doing in the higher time frame. So I normally go to 1 hour time frame or 4 hour, and clearly you can see that price is now in a bullish market, right? We have a market structure shift here, and of course if you look closely, right, price also create another market structure shift after bouncing from this, breaker block right there. Okay, so now we have two market structure shift to the upside. So let me just mark this so you can see. So now we have two market structure shift, right? We have, if right here you go to a smaller time frame, you will see it is a high that is taking out this low right here. We have a low, we have a high, and a low that take out this low, so it become a breaker, right? Price coming back to it, push price to the upside, and then break this structure again. So we have another market structure shift, right? So then we go into the 15 to look for more confirmation, right? So I'm just gonna write it down for you. Here we have a market structure shift, right? Market structure shift. So we have market structure shift there, and now what do we want to see more? Price push to the upside and then come right back, right? Pull back. So what you notice here is that we have Asian low, right? And it is low right here. So price take out both of these low, right? We have Asian low, sell side liquidity, right? So we have both Asian low and this low created during the London low, both got taken out, right? So that is really important, because after price taking out that low, where price going into, it going into this right here. You can see this right here. What is that? That is another breaker block. See that? The low, the high, and then the low come all the way down here and come right back, and then push right through it and come back to that low again. So now we have another breaker block that price reject into. So we have another liquidity sweep into a breaker block, right? Liquidity sweep, right? Because this low is Asian low and London low, both have liquidity below it, and then price take all of both those low out, and it goes into this, right? So now we have another breaker block created, and price goes into it, rejects off of that low, off of that breaker block, right? So let me just take it out. Let's just do this, right? We have a breaker block. So price reject off of that breaker block up to take out liquidity. So now what we can do is going to 1 minute time frame and looking for that setup, what we can do with it. Okay, so let's go to the 1 minute time frame. Breaker block here. So the first thing that we can see is that in the 1 minute time frame we have another liquidity sweep right here. See, this is amazing, right? This is really, really good, because if we want to go long, we want to see price take out liquidity first, right? So we have another 1 minute liquidity sweep here. All right, liquidity sweep. After that, what will we see? We have this is one of my favorite, which is a inverted fair value gaps, right? So price created inverted fair value gap. This means that now bullish is stronger than the bearish, because when price created gap, and you're not gonna take any long position just because of the inverted fair value gap. It has to happen at the right time, at the right place, right? In this case, price react of a breaker block, right, and take out 1 minute sell side liquidity, and then it kind of create that inverted fair value gap. So it's not just a random inverted fair value gap where you're looking for your entry, right? It is happen at the right place and happen at the right time as well. So we're not taking the trade just yet, right? After we have inverted fair value gap, what do we see next? We see another market structure shift, right? I'm gonna take this. This is fine, right? We have another market structure shift on the 1 minute time frame right there. Okay, you see that? So now we have inverted fair value gap and also a market structure shift on the 1 minute time frame, and of course we have already liquidity sweep. So we have three now that that we wanted to see in order for us to take a long entry of the 1 minute time frame. And after we have this market structure shift, what do we see next? Price pull back into what? Fair value gap. We see right there. So now we have 4 confirmation for our entry. This is where our entry, become a valid entry. Or we have this. So now we have liquidity sweep on the 1 minute time frame. Price goes into our breaker block, or on the 15-minute time frame. We have price push to the upside, created inverted fair value gap, and also created what? Market structure shift, right? And then price going to the upside, never coming back until this right here, coming back into what? Fair value gap right there. So now we have 4 confirmation that we wanted to see in order for us to take a long entry, right? So there, when we can entry our position right there, and my stop was just below the fair value gap, right there. If price coming back, it's take out the low, and most likely gonna keep going, so there's no point of trying to put your stop here, right? So I'm gonna put my stop there, and then where is our entry? Oh, sorry, where's our target, right? So it's so obvious, right? The first one is here. I talk a lot about the wick like this one. This to me is one of my favorite target to use, because when you see a wick like this, it close to your entry point. This is so easy to price, so easy to get to here, right? It has a lot of liquidity when you see a wick like this, and especially during the 8:30 news, it wake up and it create this type of wick, and then price kind of come back down. When price want it to go back up, this is the easiest level for price to go to, and this is should always be your first target for, let's say you take out some profit, or if you're holding position, when price reach this target, you take out some profit, move your stop to at least break even, if you want to to kind of trail your stop loss. Because after take out this price could this level, price could reverse or keep going. In this case, it was keep going, but it's always good to take out some profit when it take out type of this level right there, when you have a wick, because it has a lot of liquidity. If it has enough liquidity, price take out that high and it just reverse. But if it doesn't have enough liquidity, price is going to keep going to take more, right? So in this case, that is our first target, and as you can see, price run to that really quickly, and it was really clean. It doesn't have that deep pullback. It was just run there and done. Beautiful. So in this case here, can we enter more position, right? But first, let's go to a 15-minute time frame and see if we have any target that we wanted to price to go to. And as you can see here, another wick that like I said before, this type of wick and liquidity, it's so powerful to attract price to this level. And as you can see, if you go to let's just go to the 1 hour here, right? So you go to the 1 hour time frame, you can see that we have a rejection block there, right? Rejection block, the close of the body, you see that price go into it, right? So now let's go back to our 1 minute time frame. So at this point, can we entry more position here? It depends on whether we have a liquidity that sit above that level. But in this case, you can see we do have one here, but it was so far away. You can see that it take a lot of time for price to go there. But for me, if I take any trade and then the way that price goes into that level, it's clean, it doesn't have a lot of pullback, for me it's mean that price is is on a good run, right? It doesn't have a lot of resistance, or it's high frequency trading. It goes to a level really quickly. And in this case, if you want to re-entry, what you would look for is another inverted fair value gap, right? Because to me, it's always worked out when we on a really high frequency trading, meaning that price go to a level really quickly, and then price kind of pull back, and then we create this inverted fair value gaps. That's when you can re-entry, right? But of course, when you re-entry, you have to consider the stop. You're not gonna go in like too big of a position, because you add on another trade. It could be just a scalp, right? And as you can see here, it play out really well, right? Because we on a high frequency trading, price goes into a level really quickly and not deep pullback, right? If price go to a level like this, right, like this, right, you don't want to add more position. You don't want to, because this is not high frequency trading. It is really slow, right? It's just manipulation, right? So you don't want to get in more position with this type of market. But as you can see here, we have a really good, really good move, really good run, and that's when you can, entry more position. So yeah, that was really clean at how a price move out in this trade here. That's it for today's video, guys. I don't want to make this too long, but thank you for watching, and I'll see you guys in the next breakdown video.